The opinions and suggestions expressed on the following program are solely those of the participants and are not necessarily endorsed by KRMG, Cox Media Group Incorporated, or the program sponsors. This following program is sponsored by Causeway, LLC. Information in this broadcast is not intended as an investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa are not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, Causeway, LLC, and Cox Media Group Tulsa makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk. Gather knowledge in the world of cryptocurrency right now on 102.3 KRMG, Tulsa's news and talk. Welcome to Cryptocurrency with Matthew J. Moore. Matthew is locally based right here in Tulsa. Questions, comments, concerns? Call 918-460-5764 or send us an open mic using the KRMG app. Now, here's Cryptocurrency with Matthew J. Moore.
And good Sunday evening to you. My name is Russell Mills. Thank you very much for tuning in for Cryptocurrency with Matthew J. Moore. We do appreciate it. This is the radio show, live and local, right here in Tulsa, Oklahoma, that tackles the big world of blockchain technologies and cryptocurrencies and non-fungible tokens, all that stuff. Sound confusing? Well, I was confused at first, but after hanging with this guy for almost a year, even I am wrapping my mind around it. So please welcome our host, Matthew J. Moore. Hey, Matt.
Hey, thanks, Russell. And I am proud to say that you are officially a diamond hand holder. Russell is somewhat new to the space this year, but or I should say last year, but he's still hanging on to his Bitcoin. He's still hanging on to his cryptocurrency. So
and buying more.
Yes, he's buying everything that is on sale right now. So great opportunity, great opportunity. But stay tuned because we are going to have a wonderful conversation. People are talking about bull and bear markets. It's the animal spirits, right? Some want to steer it and others just kind of want to set it free, right? Well, the Federal Reserve definitely wants to try to steer it, and they play God often and centrally plan and control the monetary system. But the real question is this, though. Are their efforts futile? Where will their future actions destroy equity and bond markets and send us into a recession? Maybe even a depression? I don't know. But can they truly get inflation under control is my question. Or will they continue that money creation to keep markets from crashing? More questions than answers, really. That's for sure. But what about the crypto space? How correlated is all this? Has the bull market in crypto ended because of the Fed's hawkish tone? And some might say we need to take a more alternative approach to investing during these challenging times. And on today's show, we plan to bring on not only a Bitcoin OG, but also a master at alternative thinking when it comes to investing. And he is the CEO and founder of Morgan Creek Capital, which manages about $2 billion in assets. And his name is Mark Yusko and has a huge influence on Bitcoiners like me. In fact, my co-host Eric Cooper is also over here to my left, and he's fangirling with me. And Eric, you ready for this heavy-hitting interview?
You know, it's great when we can bring in somebody with such clout behind their name and, like you said, an OG. So, yeah, I can't wait to hear from Mark.
Yeah, no, I mean, considering that this is going to be a phenomenal show, Eric, why don't you share with our audience about what makes this informative show possible?
Yeah, today's radio show is brought to you by a company called Hedge. What happens if this really is a crypto winter? How long will the bear market last? Do you have a strategy to obtain crypto at cheaper prices? Do you plan on automating your dollar cost averaging? What about getting all or part of your paycheck in cryptocurrency? Hedge is revolutionizing how you get paid. Hedge makes it easy to automatically convert your pay into crypto. Whether you're an employer or an employee, you can get started in 4 easy steps. I'm good at this. Start getting paid in Bitcoin, Ethereum, or Litecoin. Crypto is a long-term play, and a crypto winter can be brutal, but also filled with great buying opportunities. I believe that personally very, very well. So Hedge is here to make it easy to stack those sats month after month. What are you waiting for? Start living on the hedge. Check them out at gethedge.io. That's gethedge.io. And once again, Matt, I will double down on it that you can get this going on right now and get great discounts on your crypto?
Hey, everything's on sale right now. And if you're ready to dive in with Hedge, let them know that I sent you, Matt Moore, Matthew J. Moore, right? Go to my website, mattjmoore.com, and on the homepage, scroll down and find the button that says Get Hedge. You can start the sign-up process today. Super, super easy. But here's my suggestion. With such a big guest on the line today, I say we start this conversation right away. Because you know what? To be honest, I'm like a fat kid, and this show is my cake. So let's dig in and get started. Mark, thank you for joining us today on one of America's only crypto radio shows. And we're big fans, and we're fans of Bitcoin, but also your work. Please introduce yourself to the audience and let them know exactly who you are and what you do.
My name is Mark Yusko. I reside in Chapel Hill, North Carolina, although I have some Tulsa connection, which we'll talk about. And I run a firm called Morgan Creek Capital Management. I founded that coming up on 18 years ago. And then 4 years ago, founded a subsidiary of that called Morgan Creek Digital that focuses solely on blockchain infrastructure and cryptocurrency. And I spend most of my time in that space today. As a venture capitalist, investing in, the biggest names in the support rails that allow people to own and trade and move their assets into this great new technology. So, the short version of a long tale. I grew up on the left coast in Seattle. I went to school in the Midwest at Notre Dame and then University of Chicago. Then I went back and worked at my alma mater at Notre Dame in the endowment office, and then came down and took a job here in North Carolina running their endowment, and then set up Morgan Creek back in 2004. Along the way, I married a Tulsa girl that I met at Notre Dame. Notre Dame has a lot of Tulsa connections, lots of big buildings and programs at Notre Dame named after notable people in Tulsa. So the Catholic mafia is strong. And been coming to Tulsa now every year for 37, going on 38 years for lots of different events. So glad to be on the show.
Wow. So the Tulsa connection is your wife. And I got to ask, what are your thoughts of Tulsa?
We love Tulsa. I mean, I if it were up to my wife, we'd probably live there. But we ended up in North Carolina. True story there. We were working back in South Bend, and I loved it. I worked at my alma mater. I was the number 2 guy at a couple $1 billion endowment, and I got a call from my recruiter. And Stacy said, "I said there's a job in North Carolina." She said, "Take it." I said, "Don't you want to know what it is?" She said, "No, just want to live in North Carolina." So the family had driven from Tulsa out here to the beaches on numerous occasions up in North and South Carolina, and we moved down here and have loved it ever since. Kids grew up here. So
that's awesome.
But she would move back in a heartbeat. She was just there last weekend for her mom's 83rd birthday party, and I'm part of the Miller clan over in the Utica Square area around Cassia Hall.
Okay, that's really cool. Well, I'd like to give my good friend and Tulsa native as well, Scott Davis, a shout out for making this connection on Twitter. If it weren't for him, this conversation probably wouldn't be happening today. But something I know Scott would love to find out from you, including myself, is this. And we'll start the conversation here, which is, was 2021 the year that cryptocurrency went mainstream? And if so, how come?
Well, I'll qualify it, Matt, and say yes and no, in the sense that, look, crypto has been around now for 13 years. We just had the 13th birthday of Bitcoin here in January. So I have a lot of January birthdays. I have my wife's birthday on January 9th. I have my son, my second son, third child's birthday on January 8th. And then we have Bitcoin's birthday on January 3rd as well. So lots of birthdays in January, but celebrating the 13th birthday of crypto. But the first phase of crypto from kind of 2009 to 2015 was the, first they ignore you phase, right? No one really cared. It was just a bunch of nerds and geeks and a few drug runners and others that played in crypto. One thing about technology that's interesting, all technology starts at the fringe, right? Think about the first pagers, drug dealers, first users of internet, probably porn. So it's a really interesting thing. And it's because the fringe can't, be part of the mainstream technology or mainstream banking system. So they find these new technologies and then they become mainstream. So that first ignore you phase went on for 6 years. Kind of 2015, some people started to get interested. I got introduced to it in 2013, but I was too stupid to do anything about it. I would say I got introduced to Bitcoin the same month as the Winklevoss twins. They're multi-billionaires and I'm not, so that's okay. But no one's crying for me. I'm done fine. But they just saw it faster than I did. I was in the traditional world. I was skeptical, and the key was I didn't do any work. Everyone I respect in this space starts skeptical. It's natural to start skeptical, right? This is an innovation in technology that is world changing. I mean, it is an evolution of technology as big, actually it's bigger than the internet, as big as the mobile phone, bigger than the mobile phone. I mean, this is the biggest technological innovation we'll probably see this century. And we'll talk about what that is and why. Wow. And this is a long answer to your question, but from 2015 to 2021, it was the then they laugh at you phase, right? So we've all heard the quote, first they ignore you, then they laugh at you, then they fight you, then you win. And we just entered this past year, then they fight you phase. So it's going to be tough over the next 5-6 years as the banking industry fights back.
Yep, and that's going to happen, right? Hey, we got to take a quick time out, folks. We're going to pay a couple of our bills around here, and I don't think they're taking cryptocurrencies yet, but hopefully that happens soon. In any case, quick time out, but we'll be back with more of cryptocurrency with Matthew J. Moore. You're listening to 102.3 KRMG Tulsa's News and Talk. Welcome back to Cryptocurrency with Matthew J. Moore. We are live and local on 102.3 KRMG, Tulsa's News and Talk. I'm Russell Mills. Thank you very much for joining us this evening. The conversation is about what's next. Well, we don't have a crystal ball, but we do have the ability to make some educated guesses. We turn it over to a guy who's well educated in this world. His name, Matthew J. Moore. Hey, Matt.
Hey, thanks, Russell. And he is absolutely right. There's a lot of unknowns, but we're here. If you're a crypto newbie, lover, or expert, whatever you classify yourself, we're here to dig deep and, you know what, to maybe explain these things in a little bit more layman's terms and get people to kind of wrap their mind around it. And to help me do that is my co-host. He's over here on my left, Eric Cooper. Eric, thanks for joining me on this every single weekend.
Man, we love it. And if you have just tuned in for the first time and you want to maybe hear about, what happened in the first 30 or so shows, go back, check us out on Spotify, Apple Podcasts, Google Podcasts, KRMG On Demand, or even Crypto More on YouTube. And but today we've got somebody really, really terrific. Mark Yusko's on, and we have want to get back more content with Mark. So I'm going to turn it back over to you so we can hear more from him.
That's right. Yeah, Mark is definitely a Bitcoin OG in my eyes. That people have different definitions for that, but founder and CEO of Morgan Creek Capital. But Mark, hey, I want to kick this segment off with this question here. In 2021. We did not see a blow-off top for the crypto market like we did in the past during bull runs. And that's kind of one of the reasons why I missed it. I was relying too much on past cycles, and because I always get cautious, and I don't know why, but every time I hear somebody say, oh, well, this time is different, I'm like, is it? And I mean, I was expecting some things to change, but I guess a lot may have changed over the course of the last year or two. Is this due to market maturity? I mean, it seems as though the crypto market has changed, and in the past, it used to be dominated primarily by retail spot buying, but now we have more institutions, nation states, different types of trading tools, options, derivatives, leverage trading. I mean, are things different now, and are blow-off tops a thing of the past?
So lots of embedded questions in there, and I have to be careful because we only have these 6-minute blocks, so I got to be fast. But what you're talking about, Matt, is this 4-year cycle. Right, so Bitcoin has been through, or crypto in general, but it follows the Bitcoin halving cycle. It's been through these 3 halving cycles. And what that refers to is the way cryptocurrency works, the way Bitcoin mining works is, just think of it like a data center, right? You plug in computers, you pay for electricity, you use those computers. If you have a data center, you sell that computing power to AWS or Azure and power people's servers. In cryptocurrency world, you don't have to go find customers. You just get an algorithm that provides security for this cryptocurrency network. And so every 4 years, the Bitcoin designers, Satoshi Nakamoto, whoever he, she, they are, decided that they would cut what's called the block reward, which means the amount of cryptocurrency that's given to miners for securing the network, in half. And because of that, what happens is the price has to rise. And it's actually an elegant design of the overall system, because a rising price attracts interest and attracts users, and that creates the network effect, and more users means more value. And so in the first cycle, we had this big, as you say, blow off top, because what happens is a network grows according to something called Metcalfe's law, which basically says the number of users in the network, the square of that gives you the rate of change of the network, because, you know, you tell two friends and they tell two friends, and so on and so on. And so we can figure out a value of any network, whether it's Apple Computer or Google or Facebook, just based on the number of users and the interconnections between the users. And Bitcoin's the same way. So what happened is the network reward goes down, the number of users keeps rising, the price starts to rise. But then what happens is speculators come in, because there's 4 types of market participants. There are investors, people who buy things based on fundamentals. There are traders, people who try to scalp profits long and short, depending on what they believe. Then there are speculators that come in late to a party and they buy things just because they're going up. And then there's gamblers who really don't care about the markets. They just want to bet on something. So unfortunately, in these cycles, you get the speculators that come in and they drive the price well above fair value. You get this blow off top that you refer to. And in the first cycle, it was a 20x move. In the second cycle, it was a 10x move. And in this third cycle, it was only a 5x move. Went from 10,000, actually about a 6x move, went from 10,000 to 60,000. And people thought, oh, it has to keep going to 100,000. Well, the difference is the size of the network. When the network is very small, it's very easy to grow 10 times, 20 times, 30 times. As it gets bigger, it's harder to grow. You need more people. So at each halving, the peak of the cycle has gotten shorter. And that's logical.
Eric, why don't you? We got 2 minutes, but I think we can cover another question here.
So it seems like the 4-year cycles of Bitcoin are now broken. So Matt had mentioned in past episodes that he thinks a bear market could be in store if we broke below 40K, and so here we are. So two-part here. I think I know your answer on this, but are we officially in an extended bear market, or has the cycle lengthened? How low does Bitcoin go if we see ourselves into this bear market?
Yeah, so the cycle is definitely not broken. So we're still in a 4-year cycle. Those 4-year cycles have 4 seasons, right? Spring, summer, winter, and fall. And we are definitely in crypto winter, which is the bear market part of the cycle. If you think about the 4-year cycle, it's about 2.5 years of spring and summer, and then a year and a half of fall and winter. And we're definitely in that winter time. And how low can it go? If you think about history, and history doesn't have to repeat, but it has for 13 years, is the low each year is higher than the previous year's low. And that's because the network keeps growing in size. We've only violated that once in 2015. We were down about 5% low to low. And so my guess is that 29,000, 30,000 is right about the point at which there's lots and lots of support. We got pretty close to that at 33 last week, and then we bounced nicely off that. Is it possible to go below that? Sure, but it's unlikely given how much the network has grown, how many users you have, and how many people really want to own part of this network as part of their portfolio.
Love it. Well, we're going to take another break, but I hope everybody's enjoying this conversation. We got more juicy questions coming, so stay tuned.
Absolutely. And, it is going to be interesting to see what happens here over the next few months, because we're seeing the IRS perk its little ears up. We hear Walmart's going to create its own cryptocurrency. A lot of moving parts here. Stay tuned to this show because we'll keep you apprised. You're listening to Cryptocurrency with Matthew J. Moore. We're live on 102.3 KRMG, Tulsa's News and Talk. Quick timeout. We'll be right back. Stay with us. Oh, welcome back to Cryptocurrency with Matthew J. Moore. We're live and local in the big city of Tulsa, Oklahoma on what has been a glorious Sunday. Hope you enjoyed it. Glad you're here with us. We are here every Sunday evening from 5 to 6 and talking about the world of cryptocurrencies. And our guide down that path is Matthew J. Moore. Hey, Matt, welcome back.
Hey, you know what? Thanks, Russell. I appreciate it. I love doing this every Sunday. And, we cover a lot of fun topics with a lot of fun guests. And it's a journey. I mean, cryptocurrency, financial education, financial sovereignty, it's all a journey. It's all a learning process. So don't be discouraged if a lot of this is over your head. But we like to talk about the technology and the economics of things. But to help go along this journey, I have brought my trusted co-host, Eric Cooper. Eric?
Hey,
thanks, man.
Matt, I think of this is if you're not into crypto and all this up and down, it is what it is.
It's fine.
But when you are into it, it doesn't matter if you own Apple, if you own something else, a different portfolio or crypto. When it has fluctuations, you're going to be like, the world is fire, the world's burning, or hey, we are on top of the world. We made great decisions.
Hey, this is what separates the men from the boys.
Yes, diamond hand is what they call it. And so we have been speaking to Mark Yusko, and he's the CEO of Moore and Causeway Capital. And so we're going to welcome back Mark to the show. Mark, thanks again for joining us today.
No, great to be here.
Well, you know what? I was talking to our last guest. He's an economist and trader from our last episode, and I had talked to him about the Federal Reserve and their policies. And I think I was listening to a recent interview about this that you were kind of talking or hitting on this. But I did want to bring this up because I do think that the monetary policy may have some kind of impact. I may have an idea where you're coming from on this, but here's where I kind of was taking a stab or a guess myself. I kind of figured that what came out from the last meeting with the Federal Reserve, it was pretty much a bunch of stall talk. I mean, we were going to plan, but we do have a plan, but need more information because things are uncertain. When we have more meetings, we'll have more information. No balance sheet reductions until after we raise rates in March. And I'm under the opinion that the Fed might be painted into a corner. They want to get inflation under control to maintain credibility, but if they take a big measure, the measures that they need, they will risk breaking maybe bond and equity markets. And so therefore they have to kind of let inflation run hot in fear of bringing the economy to a halt. But they have to give the illusion that they will act tough. And even if they raise rates to 2% by the end of next year, that's like taking a mop to the ocean. There's no way that they could afford to take the kind of actions that they did in the 80s. Do you share a similar sentiment, or am I off?
No, you actually haven't even gone far enough. They've completely lost control. And look, I think the biggest problem is this belief that somehow the Fed's actions, I think it's interesting, like they call it the Federal Reserve, yet it's not federal. It's actually owned by the banks. It's a private bank owned by the banks. And there are no reserves.
No reserves.
Right? There's no reserves in the Federal Reserve. And so the idea that somehow it has a goal for stability, economic stability, is just kind of silly. It was created in 1913 to essentially, I hate to say it this rashly, but it's created to steal the wealth from the masses and give it to the rich. And that's what inflation is. Inflation is theft from all of us listening and participating on this call to the elite. And what do I mean by that? Well, think about it. If you think about a dollar, right? When we set up the Republic in 1776, the dollar, which we stole from Holland because of the Rothschilds, the dollar, it from 1776 to 1913 was worth $1. Had a little bit of fluctuation around 2 wars, but it was worth $1. There was no such thing as inflation. Then in 1913, we created a central bank, just like all the other central banks. The Rothschilds created the first one in Holland. Then they created one in France and in the UK and in Spain and a few other places. And eventually the US got one. And the purpose of a central bank is to fund the banks. Think about it. Do you or I borrow at Fed funds? At
No.
Fed funds, interest rates are 0. What are the interest rates on your credit cards?
Yeah.
Way more than 0. What's the interest rate on your mortgage? Way more than 0. Who borrows at Fed funds? The banks. So the Fed funds rate is an artificially manipulated tool for liquefying a system that bankrupted themselves in 2008, 2009 with the subprime fiasco. And they still haven't dug their way out of it. Think about this. We're 13 years after, right, the global financial crisis, and we still have the loosest financial conditions in history. Mm-hmm. There's no emergency. The emergency was over 13 years ago.
Right.
So it's all a facade to cover literally this plan, because the plan isn't to raise rates or lower rates. The plan is to liquefy the banks as much as possible. And so now the problem is they've painted themselves, to your point, into a corner, literally painted themselves in a corner. They can't raise rates because how would you finance a deficit of $3 trillion and a national debt of orders of magnitude more? How would you do that at higher rates? Can't happen.
Exactly.
So, Mark, how will the macroeconomic picture in 2022 impact both the crypto and the equity markets, in your opinion?
Yep. So, look, the thing about crypto that people have to remember, and particularly Bitcoin, one Bitcoin is one Bitcoin, right? It's a unit of account. It's a better form of money. There's only one money in the history of mankind. That's gold. For 5,000 years, gold has been money. Why? Because money has to exist in the absence of a liability. Everything else, 775 paper currencies in the history of the world, all of them are currencies. They're not money. Right. Currencies are backed by debt. 3/4 of those currencies have disappeared because of excess debt, like the Roman solidus or the Ottoman Empire's currency. So all currencies eventually bust because all empires fail or fall. And so what's been going on is this very slow and steady liquidation or devaluation of the currency. And that's why the price of Bitcoin rises. That's why the price of other crypto assets rises. It's not that they're getting better. It's that the dollar's getting worse. That's why gold appreciates. Remember when gold used to be $35, 100 years ago? Now it's $1,900. It's not that gold got better. Gold is a rock. Right. The currency got worse. And so that's what's going to happen in the macro. The Fed is going to be forced to keep pumping, just like the ECB and the Bank of Japan. Here's the thing. The Bank of Japan in 2008 said that they would stop doing QE. They're still doing QE today. Right. Why? Because they have no choice. They have too much debt. They can't allow interest rates to rise. We're in the same place. We're 11 years after Japan demographically, meaning in terms of the number of 65-year-olds that turn 65 every day, 10,000 of them every day for the next 15 years. So that's a long way of saying.
No, I like it.
There's going to be lots of devaluation of currency around the world, and real assets, stuff, will continue to get more valuable.
Right. Yeah, I share that same thought. And I was listening to Anthony Pompliano a while ago, and he had made this mention, this idea that Bitcoin might be tracking with the 10-year Treasury yield, which might go counter to some macro narratives that we've been hearing.
It's wrong.
It's wrong.
Look, Pomp and I are friends and partners, but he got that from another guy on Twitter.
Okay, so no hard feelings towards Pomp then.
I mean, short-term correlation looked okay, but it's illogical if you think about it, right? If interest rates rise, that means liquidity is falling. If liquidity is falling, then real assets usually do poorly, paper assets do well. When liquidity is rising, that's when risk assets do well. So I will argue that there was a spurious correlation last year because anytime rates rise, people get liquidated because there's so much leverage in the system. People have margin debt like we've never seen before. And when people get liquidated, they don't sell what they want to sell. They sell what they have to sell. So go back to March of 2020, right? The market crashed. Well, what happened? Gold went down, bonds went down, and crypto went down. That doesn't make any sense. Well, they only went down shortly, and the correlation went up in the short term because people got margin calls. They couldn't sell the stocks because they were already down. So they had to sell their gold, their bonds, and their crypto to pay the margin call. The same thing happened over December and in here to January. Look, Peloton's down 90%. If your stock's down 90%, you can't sell it and get anything to pay off your debt. So you have to sell the things that haven't gone down as much.
So, Mark, what regulatory challenges do you see coming for crypto? And, what are things
Lots.
that you are concerned about, and what are things that you have more confidence in?
Now, look, regulatory challenges are normal, right? Every disruptive technology in history has been fought by the incumbents using regulatory
Force
changes. So when the automobile, right, when the horseless carriage was created, they passed a law in New York City that you had to have a person walk in front of your car with a red flag so that the horses and the people wouldn't get hit. Okay, that was done by the horseless carriage people the horse-drawn carriage people, because they didn't want the horseless carriages to take their jobs. In fact, my part of the reason we have the Tulsa connection is my grandfather-in-law took a job with upstart American Airlines. His parents were horrified because he was leaving the safe job with the train. And the train companies passed out pamphlets saying that, if you got on an airplane, you'd die because your body would cave in on itself. Just silly. And the banks don't want to be disrupted, because as people take their money out of the bank and put it into crypto, because if you leave your money in the bank, it becomes the bank's money and they pay you zero interest.
Right.
If you convert it into stable coins or crypto, you can get paid 6 to 8%. That's a better deal. Banks don't like that. So they're going to push regulation like this nonsense from the White House to slow down the technological innovation. It's like when the telephone companies tried to pass laws to outlaw voice over internet protocol. Just silly.
Yeah. Wow. Well, gosh, there's so much to unpack, and we got a lot of questions, and we'll continue this in segment 4. But I do want to encourage our listeners, if you want somebody to hold your hand in this, and you just like, hey, I just want some guidance, go to my website, mattjmoore.com, set up a consultation. I'd be more than happy to sit down with you, kind of share my knowledge, but also hold your hand if you are eager to buy some of this cryptocurrency that's on sale right now. But yeah, don't waste any time. Keep learning, keep tuning to this show, because we got a lot of exciting content.
Yes, we do, and we're not done sharing it with you just yet. Yep, we got another segment coming up, so stick with us. You are listening to Cryptocurrency with Matthew J. Moore. We're live and local on 102.3 KRMG, Tulsa's News and Talk. Be right back. Welcome back to Cryptocurrency with Matthew J. Moore. My name's Russell Mills. Thank you very much for joining us. It's been a fascinating conversation with Mark Yusko from Morgan Creek Capital, and we're going to keep it going here. We got a few more minutes to share with you. Stick around, and then don't forget, we'll be right here next Sunday at 5, and if you ever miss an episode, krmg.com or the KRMG app is your buddy. Just go to the on-demand section, and you know what? You're in demand, Matthew J. Moore.
You know what? As long as we're offering good products and services and good information, which I believe we are on this show, then hopefully our audience will continue to grow and grow. And somebody who's been with me all the way through that is my co-host, Eric Cooper. Eric, why don't you introduce our guest back, and let's get this show on the road in this short segment.
Yeah, and just like Russell just said, we are talking with Mark Yusko, and if you've heard Mark's answers, this guy knows what he's talking about. He's the CEO of Morgan Creek Capital. So, Mark, again, we appreciate you hopping on here with us today.
No, happy to be there. It was actually kind of fun to hear a Moody's ad
Moody's jewelry
staring at my wedding ring that I got from there.
That's awesome. That's awesome. Well, Mark, let's start here. For the everyday Joe, what are your thoughts on using services like BlockFi and Celsius? Should they be using leverage on their Bitcoin holdings to earn yield?
Okay, so I'm a huge believer in BlockFi. I'm a big investor. It's one of the best investments I've ever made in my career. We invested at the very beginning at a $20 million valuation, and the company's latest round is at $6 billion. So it's been a good one. And I love BlockFi. All BlockFi is, right? Blockchain financial. It is a financial services company. It's a bank. You can't call it a bank because the banks get very upset. But what they do is they take deposits of digital assets and pay you interest. They lend those assets out and earn a higher rate of interest and earn a spread. That's what they do. Now, one of the other things you can do is you can trade through them. And to your point, you can use leverage. I am not a fan of leveraged trading. Now, look, margin trading, a little bit of leverage, one turn of leverage, meaning if you have $1 of equity, you put $1 of leverage. That's okay. Although the problem is, if you do that in the stock market, you're probably okay 7 out of 10 years. But those other 3, you're going to get a year like we had this year, and you're going to get a big margin call and you're going to lose your stock. It's worse in crypto because the volatility is higher. I mean, the volatility of Bitcoin is 80, same as Amazon.com stock. And so levering an 80 volatility asset to me makes no sense whatsoever. And the nice thing about BlockFi, and I don't know as much about Celsius. I like Alex; he's a good guy. I've spent a lot of time with him. We're not investors there, and I like those guys, but they don't allow as much leverage as the crazy stuff over at Binance and some of the other places, Bitfinex. But I'm just not a fan, right? The way people should think about this asset, right? Particularly Bitcoin and other cryptocurrencies, but let's just focus on Bitcoin. Bitcoin is the best performing asset over the last 13 years. It's compounded at 212% per year for 13 years. Okay. Now, Amazon has compounded at 100% for 25 years. Okay. That's better. They have the same volatility. Now, the problem is nobody likes volatility. So I ask people all the time, who bought Amazon.com stock 25 years ago at the IPO and held it to today? There are 5 people: Jeff, his mom, his dad, his ex-wife, and Bill Miller. That's it. Everybody else got shaken out of trade because every year, including this year, it's had a double-digit drawdown. The average drawdown is 31%, 5 times more than 50%, twice more than 90%. Okay. Every year, including this year, Bitcoin has a double-digit drawdown, and people sell. You should never sell. You should buy over time. You shouldn't buy all at once. You should take 1, 2, 3, 5% of your portfolio, actually more if you're younger, but all of us need to have some exposure for 2 reasons. 1, it's the best performing asset, and 2, it's low correlation to other assets. It's 0.15 correlated to stocks, 0 correlated to bonds. Therefore, if you add it to a portfolio, the risk of your portfolio actually goes down, right? The dumbest thing anyone could do, the riskiest asset you could hold today is cash, because every day you're losing money because of inflation. It's a horrible investment. Second worst thing you do is bonds, okay, because you're only making 2, 3% and your inflation is worse than that. So that's bad. If you add stocks to a bond and cash portfolio, your risk actually goes down, not up. If you add small cap stock, international stocks, emerging market stocks, your risk actually goes down, not up. If you add venture capital, your risk goes down. Add post-merger SPACs, risk goes down. Not recently, but over the long term, risk goes down. Same thing with crypto. By adding that 5% piece of crypto, the risk of your overall portfolio goes down, and you should be buying over time. My last piece of advice for the average person is the price of Bitcoin doesn't matter. The price of any asset doesn't matter. The price is a liar. Price is not value. Value is the underlying value of the network, the underlying value of the company, the underlying value of the cash flows. It's the value. The price is just what 2 people agree to, exchange a small amount of that good or service. So sometimes the price can lie to the high side. Sometimes it can lie to the low side. I would say today, Bitcoin and other digital assets are pretty fairly valued. They're not undervalued or overvalued. They're pretty fairly valued. So I would still be acquiring them, but I wouldn't buy all at once. I'd buy some today. I'd buy some next week. I'd buy some the following week. I remember I was on CNBC in 2017, and Melissa Lee, while I was on the show, the price went from 10,000 to 8,000, like literally while we were talking. And she said, "What should we do?" And I said, "Buy it." And the look of incredulity was incredible. And she said, "What do you mean?" I said, "Oh, you just say that no matter what." I said, "No, you should buy it today, buy it tomorrow, buy it next week, buy it next month, buy it over time, and build a position that will benefit your portfolio, because this asset, this digital technology, is the most important technology we've seen this century."
I love it. I love it. Well, Mark, thanks for coming on the show. We will see you in Miami at the Bitcoin conference. This was phenomenal. Thank you.
Hey, thanks for joining us for Cryptocurrency with Matthew J. Moore, and we'll see you right here on 102.3 KRMG next Sunday at 5. Have a great week.